Hey folks, welcome to 9 to 5 to Freedom. My name is Alex. So glad you found this channel. In today's channel, we're going to give you a midweek recap of our high yield dividend portfolio. And then I'm also going to share my plan on what I'm going to invest in once I get proceeds from the sale of my rentals. So make sure you stick around for that. For those who are new to this channel, in this channel I talk about my journey of building a dream to leave that 9 to 5. I talk about my corporate job, talk about investing a little bit in real estate, and what I'm doing most recently is a high yield dividend portfolio using funds like Roundhill, YieldMax, Rex, and others. So make sure you stick around and check out the content. All right, let's dive right into it, folks. Okay, so this is my channel. For those who are new, please check out this content that I have on here. Talk about the different funds. I'm doing weekly reports on Fridays of the portfolio that I have, tracking its performance. So make sure you check that stuff out as well. I'm up to 31 subscribers, so welcome all new subscribers. Thank you for following this journey. Hopefully we can all work together to build those dreams of ours to be financially free. Okay, folks, so for those who are new, this is my portfolio. This is what I've been tracking since January, and I just wanted to give a snapshot here. Some of the funds that I have. USA, this one pays quarterly, and so far, I mean, year to date, we're down like 5.39%. We got JPQ from JP Morgan down 7%. XPay, XDT, RDT, QDT, these are all from Roundhill. We got a Rex fund, FEPI, CLM, CRF from Cornerstone, YMAX, YMAG, and Misty Coney. These are all from YieldMax. And then we have a Curve Fund, TSLP. And this is what their performance has been since year to date. Now, this is count the dividends that it's paid out. This is just showing you the type of performance. Now, as you can see here, some of these got really hit during this slight downturn that we had here, especially the YieldMax ones. This is what I was really shocked. Sorry, I kind of erased the negatives here, but these are all down like over 10%. Okay, I know they pay high dividends, but how do you recover from that? I don't know. And so what I've learned is, you can get your dividends up front, but your fund's just you're going to lose your initial investment unless that NAV keeps up. So not too impressed with the bottom half of the screen, but I do like the top half. So that's what performance has been. We see today, this is videos from March 19th. We do see an uptick, and I mean, you can make a case for Misty right here, up 5%. So I really like to see that. That's really nice, but I do like seeing the 1% uptick here as well. This is really nice recovery. So let's now dive into what I'm looking to do next. The positions that I'm looking to move my money into. And what I really want to do is I want to review some of these positions. And for those of you who are watching this, I'd like some feedback. See what you guys think. Does this look reasonable? What do you think about my approach? Again, I'm not looking for anybody's financial advice, but just looking for a second opinion. Okay, this is basically what I'm planning to do. This Friday, I'm getting some money from a sale of a rental, and that amount is going to be somewhere around $185,000. This is a huge chunk of money. I'm trying not to lose my money. I've been testing with these high yield dividends for about 3 months now. Started in January. We've been on a downturn, and I'm really glad that I was able to see their performance on a downturn. But basically, this is what I got going on. I got my tickers here, guys, and let me zoom in for those who are on mobile so you can kind of see better. All right, we'll start from the top here. XPay. So XPay is from Roundhill. They have a target of a 20% dividend per year. Okay, what I did here is in column E, this is the latest dividend percentage that they're paying based on the dividend amount that they're paying out from the NAV. Okay, so this is the share price, this is the annual dividend, and then this is the percentage. Basically, I've highlighted anything that is below 10%. I highlighted it like this: salmon. Anything between like 10 and 30% highlighted yellow, and anything over 30% highlighted green. What I did next here is in column F, I looked at the 1-year performance. Okay, this is what I got. Now, this is not counting the dividends. This is just what happened to the NAV on a 1-year chart. Now the delta, and I don't know if you would call this delta or not, but this is if you were to take today's dividends plus the losses over the year, this is what that amounts to, basically adding these two numbers together. Now this is probably not the best way to calculate this, since it all depends when you buy in, what price you buy in, all that kind of stuff. But I wanted just a rough calculation, like a potential what if scenario, right? And then this will tell me, based on the percentage I'm looking to invest in, how many shares I would have to buy and what they would be paying out. So XPay from Roundhill targeting 20%. I'm thinking to allocate 15% of this money, which would be about $27,750. That's going to pay me roughly $6,000 per year. Next, I really like the performance of XDTE. I think it's been one of the better performers. And if you go back to my portfolio, you can see that XPay had one of the least amount of hits at 7.15% down for the year. And again, I bought this in January. I didn't have this stuff from last year. Okay, XDTE, very close here, 7.5%. And this is what I've been tracking. So I like to see that. So XDTE, I'm thinking to allocate 20% of my money. That's going to be roughly $37,000, which potentially, again, this is thinking out loud. If we are truly near the bottom of the market, if we're going to continue to have a bear year, if these tariffs are going to continue to pull the market down into the red, obviously, this is going to be different, but nobody really knows what's going to happen. So again, we're hoping for the best, but trying to be realistic. So I'm thinking 20%. That'll get me about a little bit over $10,000 in dividends in the year. QDTE is the next position. Now this one did erode much more than XDTE, and I'm kind of not really sure about it. I don't know if I want to put 14% in here, but this is what I'm leaning right now. It's going to be roughly $26,000, and it's going to pay out 8,700 some bucks. So again, we've seen over the year performance down almost 22%, but what's lucrative is what it's paying right now in the dividend percentage. So again, I'm not sure. And for those of you who are watching, what do you guys think? Should I lower this position? Should I even bother with QDT? I'm not sure. Okay, moving down. YMAC. This is from YieldMax. This pays a whopping 48%. Not really impressed with the performance from YieldMax funds. It's been down 22.8%. However, the current dividend is pretty steep, so I'm thinking to allocate about 4% into that, roughly $7,400, which would generate me about $3,500. Again, we're gonna see some NAV erosion, so I don't want my fund to dwindle down by 50% by the year end. That I'd like to keep it as close to what I've invested as possible, right? So I think I got to keep my expectations reasonable. Next one here, I'm going to skip over YMAX, just not impressed with its performance. Next one here is MSTY. And let me jump in here and make my case for MSTY. A lot of people got burned on this one. This is what I'm thinking. I'm looking at the total year chart. And hear me out, folks. This fund started out February 23rd, 2024, so a little bit over a year ago. It started out at $21.60. We are only down 1% since the inception of this fund. Now, this is what I see. I see two mountains and two valleys. We're going almost double, well, more than double, $42.99, almost $43. We're going back down to 19 bucks. Then we go back up to $37. Now we're down again. Now, this is MSTR play, right? So we're getting the dividends from MicroStrategies, which is tied to the Bitcoin price. Bitcoin price today is $87,000. There's a lot of talk about making Bitcoin one of the reserves, all this kind of stuff. We're not sure, but maybe this is a buying opportunity. Maybe we're gonna see another spike here. I'm not sure, but I don't think Bitcoin's going anywhere. And I think this might be an opportunity to buy into some Misty. Okay, and again, this is very speculative, so it could go either way. I don't want to jinx it. I don't want to put a lot of my hard-earned dollars into it, but I'm thinking a play that's going to potentially give me a little bit of an upside. Okay, so Misty right now is paying 70, almost 79%, and if I throw in 5%, if I throw in a little bit over 9 grand into it, it's going to generate 7,200 bucks potentially. So the risk versus reward, you know, I'm not sure. I'm not sure if this is good or not. Let me know. Let me know what you guys think about Misty. Okay, moving down here. We're going to skip over JEPI. Just not impressed with its performance. JPQ, I like it. Okay, this is one of the safer ones. JPQ's been around the block for a while. It's paying a modest 11% dividend, but overall, it's actually kind of tracking the S&P 500. It does pretty well. Look at this chart here. JPQ. Okay, maximum chart. Look at that. We have a sideways and up chart. We started out at $49. We had a little bit of pullback, but it's been increasing. We're up to 52. So over its lifetime, it's up 7% as it's paying that modest dividend. I think it's a pretty safe play, and I want to have some sort of position in it that's going to protect my portfolio from some NAV erosion. So JPQ, I'm thinking 10%. That's going to be $18,500, and it's only going to generate 2 grand. But again, I think this is going to protect me. Next one down is AIPI. Now this is an AI one. Again, this is a little bit more risky. But we got a juicy dividend of 38%. Now look at this performance. This is what I like about AIPI. I don't think AI is going anywhere. If I look at the all-time chart, we started at $52. We're down to $43. We're only down 17%. Only 17% since June 7th. So a little bit less than a year. We're down 17%, but it's been paying a 38% dividend. So, I mean, you're getting that difference, and I think that's pretty sweet dividend there. Again, I don't want to put all my money into this, but I'm thinking like a 6% position, about $11,000, and that's going to yield me 4,200 bucks a year. We're going to move down here. BTCI. This is a play on Bitcoin. Very similar to the play on MSTY. This is from a different fund. So if we look at BTCI, all right, BTCI, look at this maximum chart. We started at 50 bucks, It's up 4% in its lifetime. We're sitting at 52. It was at 50, and that was as of October 18, 2024. So about half a year ago. Now, it's paying a 33% dividend, and it's been actually going up in the positive direction. I don't know. Do you think I should risk a little bit more in here? I'm thinking 6%, 11 grand. That's going to generate me about $3,600 in here. Okay, next one. These are two other very similar plays to JEPQ. These are just from different funds. SPYI. We'll pull this one up. This is from NEOS. Okay, this one's been tracking sideways and up. I like that. It's up almost at a 0%, and it's paying a pretty decent dividend of 12%. So I think it's just diversifying. That's the way I look at it. I'm looking at these different funds who are managed by different fund managers, and as long as we kind of spread our eggs a little bit, I think that might be not a bad play. Okay, so I'm thinking 10% position, 18.5 grand. It's going to generate about $2,300. Last one here is QQQI, and this one very similar. This is on the NASDAQ 100. Okay, we'll look at all-time position. We started at $50. We're down 2%. We're at $49. Not much of a loss, and I don't think this is NAV erosion. I think this is just direct correlation of what we've seen with the market. If we look at the 1 month chart, we're down 9.7%. Yes, it's a little bit more than QQQ. Okay, if we compare that to QQQ 1 month chart, QQQ is down. Well, actually, folks, look, QQ is actually down 10.8% 1 month chart. So QQI actually did better. Okay, again, this one pays 15% dividend, which is actually higher, and I'm thinking another 10% position in that, and that's going to be about $18,500, which would yield me $2,800 per year income. Okay, if we tally everything up, we're over 50 grand at $51,073, which is a targeted 28% return on investment. Now again, we're being very optimistic. If in fact the market recovers from this bear situation, and if we are in fact in near the bottom, this will yield us around $4,200 a month, which is phenomenal. Okay, just for your reference, folks, and again, we will see how this is going to play out. This house that I sold, it rented out for $1,550 per month, and that's not counting paying any of the maintenance, paying any taxes, paying any insurance, bills, whatever, you name it. This is going to more than triple if in fact it holds up. That's what I'm thinking. Let me know what you think in the comments. Does this portfolio seem stupid? Should I be investing in SCHD, the 3.5% yield safe dividend that actually grows, or should we risk it? Now, I'm not going to be dripping anything. None of these funds are going to be reinvested, okay? And I know you're going to say that I'm going to experience NAV erosion, and that's fine. The reason I'm doing that, this is my theory. I do have some bills I need to pay. I have some things I want to pay off. I'm going to use these dividends to pay those items off. And once I do that, I think I can start reinvesting back into these funds to grow this portfolio. But for now, I just want to see what's going to happen. What are we going to end up with at the end of the year? And how much of income am I able to produce on a monthly basis? I'm not going to do any margin. Okay, with the portfolio that I did with $12,000, I learned a valuable lesson. Margin really kicks your butt in a downturn. Okay, you're not only losing your own money, you're losing the bank's money that you have to pay back anyways. So in this experiment. This year, there will not be any margin. Again, things might change, but as of right now, we're not going to use any margin. We're going to diversify our portfolio among these funds, and we're going to see how they perform. We're going to track this closely since this is a lot of money. And yeah, so that's it. I know this has been a really long video, but this is what I've been thinking about a lot, and I wanted to kind of lay it out here. So if you like this, folks, make sure you give me a like, subscribe. Again, thank you for all the new subscribers to this channel, and we'll see you on the next one, folks. Take care.